But in this video, I want to give you a big market overview. And don't forget, Bitcoin halving is only 270 days away. So it means we have only limited time right now to invest in Bitcoin, our favorite altcoin. So we will speak about day trading, about swing trading later in this video. Let's start with a big overview. What is happening in the market right now? And Bank of England hikes interest rates. Yesterday, the Bank of England hiked the interest rates, and Bank of England anticipates that economy policy will successfully reduce inflation by half in the British economy before end of this year. And this speaks again in the big picture. It perfectly fits in. You see, in around 300 days or 290 days, so in around 10 months, the Bitcoin halving is. And usually after Bitcoin halving, we see a run in the market. So we are going for sure in a bull run. So you see the Bank of England also, it perfectly matches. The Bank of England also expecting that the inflation getting cut in half by end of this year. So it means not only Bank of England, it means in general the European Union and the US will getting healthier, the economy getting healthier and getting ready for next bull run. So it perfectly fits in. But, and now it's getting very interesting, they hike the interest rates, and with the hike of the interest rates, obviously the European market dropped, because the higher the interest rates, the more the institution getting out of the risky assets like stocks and putting it into US bonds or US stocks. And what is the price? Stocks making the biggest moves after hours: Apple, Amazon, Airbnb. And you see, after the Bank of England hiked the interest rates, you see the people or the investors getting out of the European stocks and putting the money into US stocks. And especially where they're putting it in, they're putting into US bonds. And this is the major point, because this is exactly how the US want to get out of this shit situation, because they swing in shit. It really smells bad. And the thing is, the only thing what they want to do is, like Jerome Powell said 2011 in the interview, they want to crash either the US market or better the European market, so that the institutions putting out the money out of the stocks, European stocks or European economy, and putting into US bonds. Why? Because the US increased the debt ceiling, and it basically means they want to spend more money, but they don't have the money. So they need to sell US bonds. It's just a paper where it's written, you gave me money and I gave you a certain percentage on your money when I give it you later back. So they need to borrow money from the institutions, from the European institutions. So they want to crash the European economy. So it perfectly matches that the Bank of England hiked the interest rates, and the Bank of England has no other choice than to hike the interest rates, because the UK gilts, what are the US bonds called UK gilts, are getting so high that they have no other option than to increase the interest rates, because the inflation is getting out of hand in Europe. So it perfectly fits in here. But now it's getting very interesting, because the rating agency Fitch, and I explain you what is a rating agency. You see, rating agency Fitch downgraded the United States from its highest AAA rating to AA+. So basically, if you have AAA, so AAA rating, it means it's a very good investment. If you have AA+ or A+ or B or C or D, so the lower the letter, the more shit is your investment. So a rating agency, there are three major rating agencies in the US: Fitch, Poor, and I don't know how they called another one. So three major rating agency. And right now, in the own rows of the US, they are firing against the US economy. This is crazy, because the JP Morgan, Janet Yellen and so on, they are getting crazy. Why? People in their own row are shooting against the US economy, because what they want to do, they want to crash the European market, and the people are putting money in the US bonds. But right now, Fitch rating agency is coming and say, wait. If you want to invest into US bonds, it's not a good idea. We are downgraded it from AAA to AA because they're just increasing the debt ceiling and want to crash the European economy to get the money in. So this is basically what Fitch said, and this is very interesting because the US politics, they start to panicking because what the fuck is happening if Fitch starting doing it and another two rating agency also downgrading the US economy. It means people will not put the money into US bonds. So it means basically US would run out of money. I mean, they can start printing even more, but then they're getting into a really hyperinflation. Do you understand it? If not, go back and again try to understand it. The lower the rating, so A, B, C, D, the more shit is the investments. Basically only the rating agencies are just for the investors to tell, okay, it's AAA, it's a good investment, I put my money in. It's B investment, the rating is B, I will not put my money in because it's a shit rating, right? This is what the rating agencies are. And now it's getting even more interesting, Bratan, because if the rating is AA plus, and if maybe it will not happen, but just imagine the two other rating agencies coming and also downgrading the US economy. So where are the institutions putting their money in? They will not surprisingly put it into Bitcoin or into crypto because it's too much risky. It's even more risky than the stocks. So they're searching for a safe environment, and usually the US bonds are the safest environment for the institutions. But if they're further getting downgraded, so where they're putting the money in, and now it's getting very interesting for the big picture. Now you have really to put your phone into your anus to really understand it. There has been talk about the Brazil, Russia, India, China, South Africa, so the BRICS called, grouping contemplated a trading currency at its upcoming summit in Johannesburg. So just imagine, it means basically, if just in case, it just a small light in just far away, in case the BRICS are coming with a new currency which is made by the BRICS, like the Europes did with the euro, imagine where the institutions start to put their money in, or at least to diversify. They will not put all their money, but they start to diversify into BRICS money, into the new currency of the BRICS. This would be the most horrible thing what could happen for the US, because the dollar would further dump. It would destroy the US economy, and it's really the worst thing. So for this reason, as Fitch downgraded the US economy, Janet Yellen, JP Morgan, they start all panicking and saying, on all the headlines have been, it was unfair, it's not justified, it's all based on all data, blah blah blah, all this stuff. And you know, if they're saying this, it's usually the opposite. So right now, it didn't have that they downgrade the economy, it didn't have a big impact on the US economy. But just watch out. They have to do right now something against it, because this is not a good move, because they're coming, the people start shooting out of their own rows against the US economy. Just watch out for the big picture. This is very important to watch. Right now we see the dollar, and the dollar is very important for us, because if the dollar is rising, Bitcoin is dumping. If dollar is dumping, Bitcoin is rising. So watch out. It's very important to watch out, because we are forming right now on the weekly, the dollar is getting stronger right now, and we are in a falling wedge. So in case dollar is breaking out and we see the dollar is heading to our resistance zone of 104.6 points, then we are expecting that Bitcoin will further dump to the downside. Just watch out. It's very important. We want to see the dollar dumping. So what we want to see, that we are getting here rejected on this falling wedge and see dollar dumping further to 99.2 points. This would be amazing, because we would see then Bitcoin further pumping. So let's go quickly further through the news, because very important. Now we are coming nearly to our day trades and swing trades. The unemployment report, the US unemployment report, will be released on Friday, so the 4th August. Save your date, because At the moment, it's the unemployment rate at the 3.6%. The forecast is also 3.6%. So in case it's coming lower than 3.6%, so lower than the expectation, then we could see pump in the market. In case it will be higher than expected, so higher than 3.6%, we will see massive dump in the market. So watch out for this. What is much more important right now, bratans, is the funding rates, because the funding rates are too high. You see 0.01, and at some exchanges at DYDX 0.03 even. This is too high, and this speaks very clearly that the probability for a further dump in the Bitcoin price in the immediate short term is very likely. The probability is very high. It's not a guarantee, but the probability is very high. And the price target for our day traders, as I told you, is right now, if you're jumping into a short, it's 28,200. So it could be for day traders short opportunity of 3.1%. For our swing traders, we are still expecting that Bitcoin should go to the upside to the relief rally of 37k. We are still expecting, however, we could see a down break down below to even to 25,600, because the biggest support is coming at the monthly 100 moving average. And what speaks also for a pump in the, not in the immediate short term, but in the midterm, is the full moon phase. Maybe I'm switching here to another chart. The full moon, and you see, if usually on full moon we see always with the probability of 70 to 80% a pump in the market. So in the immediate short term, I'm expecting still a dump, but the full moon is for 2-3 weeks. So I expecting here in the next 2 weeks we could see still a pump to 35-36k. Watch out for it. The probability of a pump is 70 to 80% based on the history of full moons, because usually on new moon we see you see dump with the probability of 70 to 80%. You see this blue line, boom, dump. But on full moon, 70 to 80% a pump. So watch out for this, very important. So for our swing traders, which are holding the position for several weeks, it could be a long opportunity to 35,000 at least. For our day traders, it could be short opportunity to as low as 25k. So watch out for this. I have still my swing long position on LDO, which is 340 in a loss, 31% in a loss, and AV position $5,600 in loss, 26% in a loss. It's swing position and I will hold it. Just watch out for the total crypto market cap. Very important. We broke down this line, this yellow line, to the downside. It seems that if we closing here this daily candle further clearly down below this yellow line, means we are heading to $1 trillion market cap, means Bitcoin to 25k. But still, we have hope that this could be a fake to the downside, fake out to the downside, and we'll see here breakout out of this symmetrical triangle, of this big symmetrical triangle, because technical price tag would be $1.5 trillion market cap. It would mean Bitcoin at least to 35k, and this in conclusion would mean that Aave would reach a price target of around $3.20, which is a risk reward if you're jumping into swing position with the stop loss at $1.48. It's 3.9 risk reward, and on Aave we have here risk reward at the moment if we are jumping right now into a long position with the stop loss at $39 approximately, and a price target of $155. It's 3.8 risk reward. But this is swing trades. For day trades, it's obviously short opportunity, because if Bitcoin dumps, also altcoins dumping. So very clear. Watch out, bratans. Watch out also for the S&P 500, because in case we are further dumping here, then we are expecting also Bitcoin to dump. If S&P 500 pump, Bitcoin further pumps. So very clear in my opinion, bratans. And if you want, you can use $1,000 free bonus. You put $100 in, and $1,000 you get as a bonus from Bybit. Link is down below. You can use it for short or for long, however you want. You can put it into your Anos how you want, bratana, how you prefer. Thank you ever for watching. I kiss you and see you later. Ha!